Joining me now is Julia Coronado, founder of Macro Policy Perspectives. And also here with some thoughts on how to play all of this Fed tightening is Nancy Tengler, the Chief Investment Officer at Laffer Tengler Investments. So welcome to you both. Julia, I'll start with you. It looks like the Fed is maybe way behind the curve here.
Well, not in the sense that the market is pricing in Fed tightening, and so therefore they are already moving, even if they haven't actually moved. We know markets are forward-looking, and so they are pricing in that removal of accommodation. And I think the jobs report just reaffirms that that's the right direction of travel. All the revisions point to a steady, strong job market throughout 2021, less of the volatility we saw. But also, as Steve noted, much better supply dynamics, more population, more participation. All of that is good news from the Fed, both, steadier demand, better supply dynamics, reinforces that there's an organic underpinning of strength for the economy, and they should be removing accommodation, but also they're going to want to calibrate this steadily, especially given the complication of quantitative tightening. They just don't know how that works. So they want to put that in the mix, but they can sort of let the market absorb that as they kind of march ahead steadily with rate hikes.
Nancy, what should the playbook be? Is it the one that's already playing out before our eyes, whether in the session today or since January? Or is this the kind of market rotation you think people should stick with?
Yes, Callie. Well, thanks. We have been advocates of staying with technology, but picking your spots in technology. And this earnings season was a perfect example of what's working, and that is the cloud. So ServiceNow is growing at 26%, and they expect to continue to do that in 2022. We saw Amazon's cloud growth 40%, Google 45%, Microsoft at 40%. You want to be in that space, and we're seeing those companies be rewarded. And then conversely, you want to have cyclical exposure. So we've been increasing our exposure to energy in the last few months. Both of these sectors are the most productive sectors in terms of revenue and earnings per employee. And that's something that we're looking at, because even though the participation rate went back up, there are still 5.4 million people who started new businesses last year and may never return to, and that was a record, by the way, and they may never return to the payrolls numbers that we all watch so closely. So we want to be in the spaces where you can get leverage, pricing power. All these companies have pricing power. I mean, look at UPS, shipping more packages with fewer packages with much higher costs or much higher prices, and they raised the dividend 49%. So those are the kind of companies we like, and we continue to add to.